Cool beans. Okay, so last week we really discussed, let's see here, let me click on this. Whoa, what's going on? No, I don't want to draw. Okay, stocks, here we go. So last week we really talked about the indicators. We went over price action, all of those things, and I think we had kind of gotten to options at this point. So as far as indicators goes, does anybody have any really questions about what we've gone over so far with the indicators, price action, really trying to find the support and resistance?
No, I don't.
No questions? Kathy, you
Not
good?
for the moment.
What'd you say?
Not for the moment.
Okay, cool. So definitely keep these, just write these down just for future reference so that you can have them, you do watch them. The MACD, the RSI, the stochastics. Like I said, the best position to really come in and buy is at the bottom of these, right? So a lot of times when you're watching the MACD as well, it will let us know really the strength of the price. So as this is high, right? We can see that right here, we actually created a new high with the price. However, MACD didn't follow with a new high. So that let us know that this price was getting weak. So always pay attention to the MACD. It's going to let us know the strength of the direction. And excuse me, and then RSI is going to let us know really the strength of the price, whether it's going to be overbought in a situation like this, creating this downtrend, where we're then oversold here, and we can catch this little trend up. But like I said, anytime that, I don't care if it's right here reading 40 and above, right? I really don't feel safe entering into a position in this area, just simply because I always have room to go down, right? So it's not just one of these indicators you're looking at a collective position of, a great entry, because we're at the bottom here, we're at the bottom here. Now, we're not necessarily at the bottom here, but we can see that the trend is starting to curl upwards, as well as in this histogram here. This is important as well, this middle bar, because as this went from a darker red to a lighter red, it let us know that this downtrend, we're coming out of it, right? So as we're looking at this and we're noticing this is changing colors, we can look for this in expectation to start changing this trend as well. Now, when this cross, this is what we call a golden cross. It definitely sent this into this uptrend right here. But like I said, this histogram in the middle is going to let us know of this movement right here. So what other indicators? Let's also look at the EMAs.
Can I ask you a question?
Uh-huh.
You know, the balls that you have there, like how are you getting that? Is that with Webull?
The balls.
See the little, like all of the, see them?
These?
Yeah. How do you get those?
Oh, now that is following this, right? So yes, that's Webull. So as my mouse moves along this price, it's all showing me the price at which this level is. So like right here, it shows me this levels over here. So as
okay, so moves, that's how Webull works.
Yes. Yeah.
Okay.
So
because I use trading view, but I've been using Webull more because it's so user friendly and because you can trade easy. To me, it's easier on the go. So that's why I was asking.
Trading view or Webull?
Webull.
Okay. Yeah.
I think Webull is a little bit more user friendly, like on your iPad, in my opinion.
Yeah.
And I've just been using it more because it has resources too. So I've been using it a little bit more than the trading view, and it's free. So
yeah, I'm thinking that's the thing about Webull, is the fact that it's giving you this data for free.
Yeah.
I really like Webull because I don't have to pay for extra indicators. I can add as many indicators on the screen as I want. Obviously, I don't need to be seeing all of them at one time, but when I use Webull, I'm not limited, right? So
Right.
when I'm on TradingView, I can only use 3 at a time if you've got the free version.
No,
So
I pay for it, but
yeah, so if I, even with the paid version, let's say I get the I think I pay for the one that's like 14 something, so I can add 4 of them, right? So I can add up to 4 indicators, but that's it. Now with cheat code, I also have indicators in the settings, right? So if I want Bollinger Bands or EMA clouds or these reversal bands, all of these Fibonacci, all of these are different indicators that are already built in cheat code. So it does allow me to use more, right? Because I can, at least with cheat code, I can use those internally. So I don't necessarily have to add more indicators. Cheat code allows me to kind of do that without having to pay extra.
got it.
But in terms of this as well, you know, I interchange the MACD, the RSI with the CC swing, the CCA squeeze. So I come in here and use this extra one as just a way to add what I need. So I only pay for the one that's like 14.
Okay.
So I can get 4 indicators.
Got it.
But I do like using TradingView as well because let me see here. When you're using TradingView on the screen here, you can see there's this little hot list here.
Oh.
So if you click this flame, it at least lets me know where volume is in the market at the current time, right? So during trading hours, I can come here and see, okay, like, let's say I found something to trade. I can come here and it will let me know, hey, a large increase in volume is here. Okay, well, what's going on? Oh, it's selling, right? So I can come in here and actually see where the volume is in the market, as well as percent gainers and losers, or biggest dollar amount. You can change these to whatever you want, right? So whatever trading style you have, whether it's gaps down, gaps up, and then if you're looking for a particular stock that you're trading to pop up here, is an even better opportunity, right? So if you know that, you know, let's say, we'll look at Apple, since Apple's here. If you're like, hey, I know I trade Apple, and obviously this is telling me that there's a high volume in Apple based on this right here. If I come in, I can see what type of trend this is creating, right? So if I'm like, well, dang, there's a lot of volume in Apple, I can come here and then use Webull as a way to figure out, okay, well, on the day chart, what's going on? Okay, I know that my 200 EMA is right here. So this is a possible target, as well as my Bollinger Bands is telling me that there's volatility in this position right here. So if we look at our stochastics as well as our RSI, we can see that there's area for us to go down here, right? So all of this is feasible simply based on, we can still create some lows over here with MACD, and we can see that is starting to turn its way back down, right? So we're going from lighter to darker right now. So this technically is not getting any better, right? If I was expecting anything to come of this, it should have gotten me a light green, right? If we're gonna go ahead and start coming out of this, then we should start making some green right here. However, I'm looking at this right now and I can see this isn't turning to green, right? And then this RSI is letting me know that there's room for some downside. And stochastic is this momentum, this blue side right here is already saying that I'm pulling the price back down. So with everything that we have right here, just looking at the screen, we can tell, okay, a large amount of that volume was probably selling. So if we go into analysis and the order flow, well, there it is right there, right? So you can even see, even though there is a large amount of volume, we're still below the average volume for Apple, right? So if average volume for trading for Apple is 97 million, well, why are we at 71 million, right? So you can see that the volume in Apple is decreasing, as well as the selling pressure has increased. And then all of the indicators are letting us know that, hey, there's room for downside. One, MACD has already given us the heads up. And then the RSI, like I said, is still creating room to the downside to say that we can go oversold. And then your Bollinger Bands is already telling you that the volatility is here. Now, why is it saying that volatility is at 122.51? Well, this is the key reason right here, right? We fought at this level. So if I'm looking at this, I can easily come in and say, all right, if Apple, if I can at least, if I want to trade Apple, that I know that I can at least come within this range and I can feel safer at 122. Now, if you fall from this position, I can expect you to at least come down to where it's literally saying your 200 EMA is. And even there, I don't want to draw too many lines, but I only want to draw it to show the significance of these indicators and the data that they're giving you. So right here, we're going to put this line, boom. Now, if we look to the left, we can see what happened around this line, right? So that we can see in the past, we've already broken through and come back here, right? And bounce right off of that line, right? So these indicators are to help us basically see what happened in the past, but bringing the data to us in present time, right? So that we don't have to keep looking back and forth. But in terms of this, you could set an alarm at this position and say, hey, let me know when Apple is within this, you know, below 123. And you can say, hey, I want to set an alarm here with this little bell and say, hey, let me know when Apple is below 123, right? And then, hey, matter of fact, let me know if it passes 122 in case I miss this particular alert. Now, I know that if Apple passes 120, that's like, I mean, obviously I already have that in there just based off of the fact that, hey, this is our 200 EMA. I know from price history that Apple at 120 gets a lot of support, right? And even when it passes that 120 right here, it still only can go as far as that 200 EMA. But even then, it gives you the signals that, hey, we're low here, and we're extremely low here. So even at these types of positions, it may not go to 200 EMA, but you can see from here where we can find the best positions. And that's going to be at the bottom of this. I feel the safest when all of these, when all my indicators are saying, hey, you're in a great position to enter here, because the only direction that I have from these types of lows is up. Even on MACD, you can see that this was about as low as it had been since here. And even at this point, this was the market crash of 2020 right here. So if Apple ever reaches this type of position, right, that's already telling you what type of position you have in price. If this is what MACD was in March of 2020, and then on March of 2009, we got that same type of selling pressure here. And this alone shows you all how the market works in cycles. Okay, so these March dips are not a coincidence, they are cycles. Like I said before, when you're looking at the market, it does work with these business cycles as well, because the whole idea of the market is that you're betting on earnings, right? You're betting on these quarters. And as these quarters end, then people, I don't even care if you beat your earnings, it's still an opportunity for your price to go down, just simply based on the fact that the whole reason we bet on your company and its value is that we were betting on the quarter. And as those results come out, whether good or bad, I need to take profits if the ride was good, right? So always, as you kind of become a seasoned trader and you actually have gone through seasons of trading, you can always go back and look at your own price history and see, like, hey, where was it that my portfolio took a dip? Okay, so it's like, oh, well, I know in September it was not good, right? So I know for me personally, I will be trading up until July to September, and I will definitely be looking out for what's to happen in September, just based on what happened with the market. Because another key thing that we have to recognize is that all of these things work collectively. So just to kind of explain what I'm saying, well, this is one example, because I have a lot of people that I have sessions with, and they either trade NEO or they trade Tesla. Okay, so I'm like, hey, if you trade either one of those, there are certain stocks that you should also follow. So for this particular example, I knew somebody that was trading NEO. So I'm like, hey, if you're going to trade NEO, you need to watch Tesla. And if you're going to watch Tesla, you can also watch different ETFs that are holding Tesla in high leverage, right? So something like ARKK, I can break this down and say, come over here, we'll look at ARKK. And I don't trade ARKK. I just use this as an example to show you how things work together in the ETFs and other holdings. So in ARKK, we can see that there's a large holding in Tesla, Square, Teladoc, Roku. So literally you could trade any of these together, right? So if I'm going to trade Tesla, I can most likely watch Square and Teladoc. Now, Teladoc has nothing to do with electric cars, but let's say I switched out NEO for TDOC. Let's see. You can see that these still have that same trajectory, right? All of these are still, even though Tesla has more of an opportunity to break when these types of humps right here come, Tesla still has an opportunity to break through these boundaries, right? Just because of the actual volatility in price for Tesla. So Tesla may be able to make larger humps, but in big picture, they still run the same type of trajectory, right? So if Tesla's doing good, I can expect ARKK to do good, and I can also expect TDOC to follow, right? Because look at how they're all reaching this same level of resistance on the super trend, right? So they all, even though different and in different sectors and industries, they're all looking to break the same points of resistance in this price. So let's say come Tuesday morning, Tesla's able to break this 652. Well, I know that ARKK can break this 116, and I know that TDOC will break its 163, right? And that's just simply based on the fact that they move together. And the same with NEO. NEO's come to the same point of resistance, right? This is not by coincidence. It's just simply because a lot of these things either work after one another. So like in the case of NEO, it's going to be following behind Tesla, right? And then in the case of Tesla, things like ARKK are highly leveraged in positions like Tesla. So because NEO is affected by how Tesla performs, Tesla also affects how ETFs and the market perform. SPY is made up a large portion of Tesla. Now, SPY isn't going to do the same though, because it's made up of so much more than Tesla. But Tesla still has the opportunity to bring the market down with it. But let's look at SPY for the sake of these holdings. So Apple is going to be your biggest, Microsoft, Amazon. So because Tesla is not heavily leveraged in here, you can't see the same trajectory. Now, if we were to look at QQQ, which is the NASDAQ ETF, Investco. So we got Apple, Microsoft, Amazon, Tesla. You can come in and you can switch this trade window right here. And let's say we'll look at QQQ. We'll look at Apple. We'll look at Microsoft. Let's see here. Ooh, what is this? Okay. So let's look at these. All right, so when we're looking at this right here, you can see that all of these have that same trajectory. Now, obviously, Apple's getting a little weak here, and that's just based on its price and how people feel about this particular trade. So, but generally speaking, this one and this one have the same trajectory. Now, with that being said, if Apple is getting weak, and we know that the SPY and the QQQ are highly leveraged in this position, Apple has the opportunity to bring the market down if it can't hold its price. So when we go back to this trade window here, these are all kind of having this same trajectory here. Now Apple's getting weak. Microsoft is still hitting this area of resistance at this 250. And then we can see this resistance up here as well. So either Apple is going to bring this down, or Apple can hit this point of resistance and then we can have this, or support here, excuse me, and then we can have this upside here. But generally speaking, like I said, when you're trading stocks, you want to at least go find these ETFs or indexes that are highly leveraged in these positions, so that when you're trading things that are in these ETFs, you can watch how other holdings that are related to these stocks move. So maybe Apple might be having a bad day, but Microsoft can be doing good and Facebook can be doing good, right? And so that'll keep the market up. But if I'm looking at Apple or I'm trading Apple and then the QQQ starts to show signs of weakness, then I know that my position in Apple is not looking good, because if I've reached areas of resistance here and I know that I have to break through, and then I look at Apple and then Apple's showing me signs that it's already got weakness and areas to run for support, then I know that it has the opportunity to pull that back. So does everybody kind of understand the basics of really just like trading in groups? You don't have to trade all of those stocks together, but if I'm going to, if you've decided to trade NEO, you need to keep up with Tesla and how it's affected by, things like ARKK. Because like I said, even though TDOC, right, it has nothing to do with EV, it still can show the same type of trajectory, just based on the fact that they're in the same ETF. So does everybody kind of get the understanding of that?
Yes.
We got in here. Cool, cool, cool. All right, let's move on from here. Now I want to touch bases back on the using Finviz for the screeners, because this is extremely crucial. Like I said, you don't need to use my settings. What I'm gonna do as well is I'm gonna show you all some of the videos that I've used to kind of find these screeners. But like I said, every time that you change one of these things, it's gonna open up the opportunity to show more results. So if I say, hey, the current volume, I don't even care what it is, it'll open up to everything, right? So it'll open up more. And like I said, right here, you click to see the chart, because that's the most important thing, is that I'm looking for particular charts that actually fall within these types of positions. And you can, on here, right here on the 200-day simple moving average, like I said, this is that extreme that we look for, right? This is that 200 right here, where it's like, if you've come this far, then I know you have to rebound off of this position. Right? So anytime I'm looking for a trade, this really will show you what's gone too far, right? So if it's above, it could be heading towards it. Now, if it's below, let's look at price below the SMA 200. These are things that have gone too far, right? Now, if they can come back, that's up to the stock itself. And when you're looking at these, when you go to the overview, you can always change it to make sure that it's in the direction of volume. I think some of these may be by, I'm not sure what it does it at first. I'm not sure if it's alphabetical, but make sure that when you're looking at these, we want to focus on the highest volume, because the highest volume tells us where the most is being traded. So also this makes a huge difference. I need to actually reset this, because I'm not interested in stocks that go up. So it's not like I have to be specified in change up. Change basically means that either opened up, right, or it opened down. Like, what is the position for the day? So if I'm looking for something that is the price is below SMA 200 and the change is up, these things have basically, let's look at the chart so I can show you. These things have gone far, right? And on the next day, it had a green candle. So you can see on a lot of these, they've ended on green. Let's actually open one of these up, Verizon. So you can see that even though, where's this 200? Right here, this 200 is here. So right now our price is below the 200, but the change is up. So basically the next few days or the last day was up. So you can go back to the screener and you can say, well, I want anything, right? So now you're looking at anything that's already gone below the 200 EMA, right? So even Coinbase is below its 200. And it's oversold as well. Now, me personally, I'm looking for optional stocks. If you don't trade options, you can change this to any, right? But I don't trade any stocks. I only trade optional stocks. And that being stocks that offer options to trade. And like I said, you don't even have to know how to trade options or be interested in it. But I think also you need to understand options as a whole, because it's what controls the actual price of the stock behind the scenes. So I'll break that down just a little bit later. But I really wanted to make sure that you all understand how to come in and really look at this, because I've got this on all. But as a technical trader, you could literally just look at the technicals, right? You can come in and say, I just want to know the technicals. Okay. Now, fundamentals is going to go into the balance sheet, right? So as I said right here, the PE, it doesn't have to be a profitable company. It can be any company, right? Because I remember last time we actually opened this up, Disney, based on the PE, was not a profitable company in terms of earnings, but it's still a stock that we know can bounce back in price, not just, we can't like negate it just because it's not profitable. So this fundamental part is going to be all based on the balance sheet. Okay. So I'm more of a technical trader, so I don't really mess with the fundamentals, just simply because I trade off of price action and how it is affected by these particular options. Right. So really, this RSI is something that I like as well. You can do it where it's extreme, where it's extremely oversold, right? Any of these positions. But I think when you're something as far as that, you really start to narrow down this list, because sometimes if something is this oversold and it's this far, it's almost like, I'm not sure if you can come back, but at least at 40, I know that you've reached this area, right? Because we can see that even at 40 here, if I reach 40, there's still room for me to come in and get this position, right? Because even on where it turned around here, the RSI was reading at 36. And at these points, it was as low as 31, and then it got as low as 27 here. So really, I want to know when it's breaking this 40 range, just because this is the optimal opportunity for me to really come in and catch a bounce off of this type of area down here. Because like I said, I feel safer in these types of positions. You can also say any, right? You can come in and just look for any stock that's below the 200 SMA, or you can always change this to above, right? So it's going to tell you the position of the stock. So like Apple necessarily isn't oversold right now, right? But its price is just in the position of heading towards the SMA 200, right? Because we still have it set to be above. So it's heading down, right? So we already know the price is below the SMA 50 and also the SMA 20. Like I said, when it falls below the 20, the price is already heading in a direction down. Now, if it's below the 50, that means it's definitely on a downtrend. Now, if it's above the 200, but below these two lines, then I know that it's on a downtrend heading towards a point of reversal, right? So I already know that we've broken this, this 50 right here. Now the 20, I don't have it pictured, because you can always go in these settings and you can have alerts for when they pass these. Like I said, that's why it's really good that even if you don't use Webull, it's good to have it as a tool, because you have these smart alerts. And let's say you like to trade earnings, or let's look at what happens after earnings, right? So around earnings, you can always expect either price to be pushed down or price to be pushed up leading towards it. So if you can catch a day before, maybe you like to come in scalping, and you can say, hey, well, let me know when the earnings are before, so that either if I can catch some type of uptrend, or if I know that the price falls down after the earnings, then I can say, all right, well, cool. Let me know when I need to be looking for a position for a put against a particular stock. So the earnings one allows you to at least keep up with, you know, when things are kind of going to be going a little crazy in price. Because like I said, even though earnings can be good, the price can still go down. But generally speaking, with these alerts, like I said, I don't have the 20 or the 10 picture. The 10 falls with the price. The 20 is sort of if you close below the 20, then I know you're in a downtrend. So always, I don't have it pictured because I can set an alert here. And even in the Bollinger Bands, this middle line is the 20. Okay. So notice, like I said, when you close below it and it couldn't make it back above this line, it collapsed the next day. Right. So anytime that you're on an uptrend, even, you want to use this line as support. So right here, we closed above it, showing us a sign that we could have an uptrend here. Now, all of this stuff was also in our favor. So you always don't have to use one, right? But if you're looking at this stochastic right here, and it's showing that, hey, we're at the bottom and I can spring this momentum back up, then that's already letting me know that right here was a good time to buy. Right. And then this MACD opened up, as well as these histogram was starting to go darker. RSI's on the upside. Now, do I want to buy in a position like this? No, I would rather be in here and riding this up. I don't care how much money people are making right here. I don't ever want to be in a position when it's on the way up. Right. I don't ever want to buy new in these types of areas. Like I said, I don't feel comfortable even touching anything over 40 RSI. Right. I'm wanting to ride this wave until it's overextended. Right. And this stochastic is going to tell me when I've reached too far in price. So I always pay attention to this because this is going to move with the price. This orange line here is the price, and the blue line is actually going to be the momentum of that price. So you can see that right here, the price was coming down, but the momentum was saying this is as far as we can go here, which pulled it back up, right? Once the momentum had kind of pushed its way up here, we're going sideways in price, right? So any money you were going to make in options was right here. This was where it maxed out your price in options, because after this point, it really just went sideways, a whole bunch of ups and downs. And this will cause a stroke up in this area, because you're like, should I hold? Should I not? Oh my God. And it's better to it's already letting you know, hey, you're overbought here. You're overextended here, which really caused this day right here, this large red bar. And even after this, like I said, we went sideways in price action. So essentially the high was 134. If you held from here, it's not smart, because you didn't go anywhere over that after that, right? You had a whole bunch of ups and downs, hitting it again, down again, and a whole bunch of really trying to push over, but never really being able to really sustain a position up here. So these were already telling you you're maxed out. And even though this was still giving us room here, it still didn't create any type of movement above these prices. That's why I say, a lot of times when you can see that you're maxing out these indicators, take profits, right? Like, you can't get too greedy, because this type of action right here in options, you would actually be losing money. You're not making any money right here in options. And if you're holding that option, you are slowly just losing money, because you're not gaining any momentum, which is a lot of where the intrinsic value comes from in a option. So definitely, when these are overextended, we want to be finding an exit here. And even look at how the histogram even started to go lighter here in price. So when you're using these screeners, like I said, a lot of this technical information right here is leading us up to trying to find what things that we like, what types of positions that we like to get in. So always come in here and use these screeners. Does anybody have any questions about the screeners while we're here?
I have a question about, not so much about the screener, but what you were talking about earlier about the problem I'm having sometimes is, like, I understand, like, I call the trade and I know, and I'm like, great. I've been doing what you say, getting in on the bottom, but then I don't want to get excited. I don't know, but I don't get out. What happened, what you said is exactly what happened to me with AMC. I did make money, but then I lost because it went all the way up. And then instead of me taking profits, I lost money because it just went sideways. But how do you know when you see it ready to take off? like, do you know, because you're used to trading certain stocks, so you know how they move? Is that why you do that instead of just like you look at a stock and you see that it's ready to break out, but then it doesn't do anything for 3 days, and so you're like crapola, or a week and a
Yeah.
half. Do you know what I'm trying to say?
Yeah, I totally get
So
what you're saying.
frustrating.
It actually happened to me with Beyond. Okay.
Okay.
So, hold on, let me grab my charger. So with Beyond, the same thing happened, but instead of the actual option, I bought the stock.
Oh, well then that's better.
So yeah, because with, like I said, with the option, whenever you get this sort of sideways motion, you're actually going to be losing
Money.
because as long as this option is not working in your favor, like I said, when that price goes sideways, you're losing money, because whether your option didn't make it into in the money, or if your option is even in the money, right? But you're losing time. So for me, let's even look at this on a day right here. Let's see here. So in particular, in when it comes to Beyond, I had known that this type of area was an area to buy, right? So when it was breaking down to this 100, it's like, yeah, I wanted to buy an option, but how long does it take to break the downtrend? Well, there's the CCA squeeze and the swing that kind of throw out these indicators. So that's why I always use them, because the MACD and the RSI are going to let me know the position. Now, these are going to let me know when my opportunity has come. Now, number one, I know that we've gone too far right here with this squeeze. So the squeeze is already letting me know that this green area is where I can feel comfortable buying, right? Mm-hmm. But it never gave me a signal in these positions. Now, does it have to? It doesn't necessarily have to. You can trade some of these positions if you want, but technically speaking, I would rather so many of these give me a signal across, like, right? So in this particular position, I can see that I'm at least in a great reversal area. These are called reversal bands. So I can see that I'm in a great opportunity right here to reverse. So then led by this squeeze indicator right here, as well as the swing. One, I'm on the downside of both of these types of things, right? So I'm already on the downside of this. I'm on the downside of this, right? So that's letting me know that something is about to happen with this indication right here. So on the 20th, I would have gotten a signal that would have let me know, hey, you can hold this, or you can buy an option and expect some type of movement. Now on the 21st, I got my signal here. All right. So this is like the second, like, okay, this is looking good. Now, if I turn on my cheat candles, let's see what the cheat candles do. What this does, oh, well, dang, it would have let me know right here that I was in a good position. Because a cheat candle, what it does is it's like, forget what happened with the price. Let me tell you what was average with the price and the momentum, right? So it kind of takes out the whole like trying to read a candle, and it just tells you, hey, you've got green right here. Now, if it's just the candle, it's just, I have to come in and read this and be like, okay, well, out of these days, what can I really expect? Now, you can go look at your RSI, you can go look at your MACD and try to figure out what's going on in these days. But these cheat candles really just kind of, okay, here's what's happening. And I can expect for this to really catch this trend. Now, these signals were the two that I needed right here to let me know, okay, I'm comfortable in the position that I'm in. Now, I didn't hold an option. Like I said, I just held the stock. But this is another thing where you have to know what you're trading. So in the case of AMC, you can come in here and now with, do I have the cheat candles on, or which candles are on? Okay, so the cheat candles are on. Let's look at it without them first so we can see what the situation was. Because I know with the price of AMC, it kind of went sideways for a while. So all this, you're losing money right here. You're losing
I did lose money.
Right. So all of this area, you're losing money. Now, this is already letting me know that we're in a downtrend, right? So you got the sell signal, the caution candle. We're heading down, not good, not good, not good. Okay. So all of this is not good. So from here, I'm already knowing that all of this is not where I want to be entering into a position. Because even though the price was going sideways, this is telling me that the pressure is being pulled down, right? So from here, once I can see this change in color, I can at least be like, hey, I think I can find a position. Because even if you entered here, you could catch this trend. Now, would you hold it from there? That would be a combination of looking at the RSI and MACD, because I never depend on one indicator to tell me something. Even using cheat code, I can't just come in here and say that, oh, because this gave me the signal and that gave me the signal. That
Uh-oh, you froze.
Hello, Ray. I've lost the screen.
Yep.
Maybe he'll be back in a second.
Hey, so this is it's this weird thing that happens with my computer. It's like when it's doing the streams, it won't charge. So it went dead. And so it's popping back on now that it dropped me out of the call. So I'm loading up my computer now. I just hopped on my phone. So 1 second. Let's see here. Everybody still here?
Yep.
Okay, cool. All right, 1 second. Let me pull this up. Yeah, because I just grabbed my charger and I'm like, what's going on, man? Next thing I know, I'm talking and the thing just shut off. But let's see, it's and Kim, what were we just talking about before that thing cut
Oh,
off?
the AMC, and I had like a few contracts, and I got in at the right. It was a swing trade, so I had it from the night before. But my problem is I didn't really pay enough attention to I didn't pay. I was excited and I didn't pay enough attention. And then I didn't expect for it to drop, because it had been for 2 days, rallying, and I didn't expect it to drop. And
you gotta expect that though, Kim.
I know, but that's I don't know what's wrong with me. It's like it's almost like I know too much from just studying so much now that I make these dumb mistakes. And as soon as I did it, it was like, girl, sis, you should have just got out and I could have got back in and wrote it up again. Like I know.
Yeah.
I made some money, but I could have made
Kim,
more.
you're not by yourself. Don't worry.
Okay,
Hey,
girl. Thank
Lashonda.
you.
Seriously.
Look, and the thing about it is, like I said, when we sort of hit those extremes on the indicators, like when I pull back up the AMC, I'm going to show you what I'm talking about. But when we really hit these extremes on these indicators, we have to take profit, because at this point, we're at highs on these indicators, and at those types of positions, they only have one way to go. Right? Like things can't just keep going up. They can't keep going up, going up. I mean, I wish the market just kept going up. I mean,
well, the thing with AMC is why I thought it might is because of, you see, again, though, I shouldn't have been listening to so many different people, because who knows if they're for you or against you, really. You really can't be trusting people. I just thought maybe it will go to like 40 because it stopped at 36. So I was like, oh, let it go up a little more. And I should have just taken it at the all-time high and went about my business, but you live and learn, honey.
With positions like that, even with Beyond, I had a one-on-one with somebody that was in Beyond, and they were kind of the same way. They were like, hey man, I was expecting for it to run past 150, but it's another thing where, like, if you're going to trade those particular stocks, definitely pay attention to the and if you're going to be in the position, right, then go ahead and chart it and say that, okay, this is where I need to get out of this position, right? Because if we can go in and chart it and we can see what the price is and where it's been. So in the case of Beyond, I already know that it can go to 150. Well, if it goes there, I'm okay with getting out there. I don't expect, even after 147 or 145, right? I'm not expecting too much run after this, right? And then we already know the volatility in the options and how much they can change in price as soon as something goes sideways or start to even go in the opposite direction. The value that we have in those options gets, taken away tremendously. Even sometimes when we're in a position, we might be up so much in 1 second, and then the next, you can be looking and your
honey, that
your
was
position
me.
is down.
I
Right?
was up like $400, and next thing I looked, and it was $16 in parentheses, and I was like, "What in the hell is going on in my life right now?"
Are
you on the screen? You're not on the screen yet.
No, I'm pulling it up now.
Okay, good. But it's all good because I'm still learning. And listen, I did make money, and I'm not like crazy. Like I feel like when I lose, like right now, it's like, well, listen, you're learning. So it's like I'm paying for to learn. So when I lose a little bit, and I don't lose crazy, but it just would have been nice to, have those extra contracts because I was on my way.
Next time we know, though, because like I said, anytime we're up, you want to take those profits, because
I know,
even if you're up in your position, just think about the people that are really putting some leverage down, right? That are really got some heavy money in there, and they're like, okay, I mean, because some people, especially in the market that we're in right now, because this isn't 2020 anymore, the market that we're in right now, some folks are making $20,000, or maybe they made $2,000, and that $2,000 might have been 2%, right? Because I remember one time I was watching some profits come in on some discords that I'm an admin in, and I noticed that there was a $2,000 profit, and then I also noticed next to it was a 2%, right? So it's like, all right, this person made $2,000, but they also had to leverage $100,000 in order to make that money. Right. So it's like, oh, great job in $2,000 profit, but how much did it take to actually leverage down? So a lot of times when you have that, 20 or 100% return, right, you got to go ahead and take it. Because
I know I'm going to take your advice with just taking profits anyway, because I'm realizing that, I want to do this for a long time, and I'm just going to take the 10 to 10. I'm not going to get greedy, because I've been getting greedy, and it's not like I don't know what I'm doing, but I'm being greedy. And that's why I'm holding the bag, and I got to stop doing it.
Yeah. Come on, Kim. All right.
I know. I hear your voice all the time.
I'm trying
and I
to
go,
get up
oh,
in.
he would be taking the profits, because I know you always take profits.
Yeah, I don't play around. Like as soon as I can make, especially in this market right now, because it's extremely volatile. There's going to be a lot of ups and downs, especially with options. So I don't really try to risk losing any of that money. I'm clicking the link top back in here now. But yeah, anytime I have the opportunity to really make some money, I take it these days, even if it's just $50, right? I will take it because that I can leverage over time, right? So I'm not always trying to swing for home runs in this market right now. I really am kind of coming in, seeing if there's available opportunity that I can sit in comfortably, right? Because I'm buying at the bottoms of these indicators. Well, I can come into these positions with a lot more comfort than saying that, oh, something's already on the way up. Can I get some more out of this? Because we already see that these runs can only happen for a day or two before they really collapse. And then still that's going to be based on the actual price action. So, man, my computer is moving as snail speed. I'm launching this meeting now. My computer open. Stuff this. So had you actually done any of the price charting on AMC when you were in that position?
Well, the reason why, yeah, because I've had, I bought some stock in AMC, so I always watch it, and GameStop. So I always just watch them just from back, months ago. So I'm familiar with kind of how AMC works. And honestly, it had been going up, and something told me to buy an option the night before when it was 14, because it was going to go up, because I had been watching it. So I knew it was ready to pop. Like I just knew. The only problem is I got greedy, because I did take profits the first day, and then I went in again the second day, and I didn't take the profits. And it went all the way up, and I just watched it just freaking go to negative, and I was so hot. But I was like, because there's nothing you could do. Like, it's like, I was like to myself, sis, you were there, like you won the gold, and then you just watched it, and that's another thing. And then instead of, another thing I do is I'll watch a stock, I'll call it, and then I'll miss it, but I don't catch it back on the way up. And then it's like, girl, you could have caught it back up. And so it's just, I wish, I don't know, my brain gets mushy.
I feel you. A lot of times too, it's best to play the stock. Sometimes the safest route to do it is to play the stock and not always the options, especially with something
I know,
like
but
that.
the options are way cheaper.
Yeah, unless you're willing to kind of just let it chill though, right?
Yeah.
Let's see, allow. Okay, here we go. I'm getting back in the meeting now. All right, so I'm in here on my computer. Let's see here. All right, cool. We're back. All right. Let me turn on the screen sharing.
This meeting is being recorded.
Okay, can y'all hear me on the computer now?
Yep.
Cool.
Yes.
Yep.
Exit out of here and let me share my screen. Host disable screen share. I am the host. What you mean? Share screen. What is it doing? Okay, hold on. Let me see here. Why is it not letting me do this? I am the host. Stop telling me I can't do this. Okay, let me click here. Launch meeting, cancel, launch, join from browser. So I'm gonna try to do this from my computer. Join audio. Whoa. Wow. Now, can you all hear me here? Share screen. Man, it still won't let me share my screen. All right, y'all. I might have some technical difficulties tonight. Let me
Oh,
see.
that's okay, hon. It happens.
Let's see. Disable share screen. Yeah, it's not letting me share my screen, but what I can do, what night works for you all, because we can kind of do this call again. Does I know I have a so another thing on Wednesday, through cheat code, I'll be doing a beginner's class for free, so you all can hop in on that as well. So I think Wednesday will be the first Wednesday that I'll be doing the class there. So once I get the information for that, I'll send the link to you all as well. Oh, you are the host now. Okay. All right. Oh, now here we go, y'all. I got you. Okay, let's see. I want to do Chrome tab share. Okay, now y'all can see my screen.
Mm-hmm.
Perfect. Okay, let's get back into the swing of this. We ain't going nowhere. All right, video conference. I can take that off. So let's go back to AMC. So you all can see my screen still?
Yep.
Perfect. All right, so let's drop into the AMC. I think it's already going to be on here as well. Oh, no. Let's put it on here. All right, so for the AMC, all of this, like I said, you're losing money right here. So from, May 19th to May 24th, there was no money, real money being made here. Now, this is an hour interval. So on this hour interval, let's actually put on. So for number one, this RSI, you can definitely pay attention to this, because notice how this was pushing down here. So if there's any opportunity for you to at least start making some money, it would be in a position like this, because at least we know from here, we can catch this uptrend. And that's only based on the fact that, you're willing to take this risk. Because I don't think anybody can come in and gauge the movement of AMC. Let's turn these to the squeeze and also the swing as well. So squeeze and the swing. So on the day, we got the signal back here. So, wow, this was way back. Oh, this was when it did that in January. Let's move back up here. So with AMC right here, one, this was at least telling us that we're coming out of this downtrend, right? So in terms of price, we can at least be looking for that position here. But let's go to it over here and let's look and see what actually happened over the last few days in buying. Say AMC. So order flow. What happened on the 27th? All right, so on the 27th, we got that push. On the 25th, we got some more buying. So it looked like this day, it had gotten caught up a little bit. But really, you can't blame yourself, Kim, because looking at these, though, right, we're at these highs. Even if you break this down to a 1 hour, you can see where we were as soon as the day opened. Right. And,
Yep.
and in any of this, even right here, you can see that this was the ultimate, like, hey, you can get out here, to be honest with you. Right?
Okay, so I did that. That was, what day was that? So
This
Thursday.
was
that
the
Thursday?
27th. Yeah.
Yeah, so I did that. So yeah, and then it was the Friday. It was Friday that I got jacked up.
Now, this is another thing. This is what should have let you know this wasn't going to go anywhere. VWAP. I think I might have forgotten. I think I've mentioned VWAP before to you all.
Yeah, you did. I didn't have it on.
Okay, cool.
Why
Yeah,
do you say
VWAP.
that? Why do you say VWAP right there? Because right there, how it goes down?
Yeah, because like number one, like I said, when you're coming into the market, let's see, like right here. Number one, if VWAP, if you can't stay above it, it's not a good look. And on every interval from 1 hour to 15, it was really being pushed down. And at the highest levels of volume, you're going to see VWAP work its best, right? So as soon as you were like, man, I think we can go to 40, the fact that VWAP was sitting down here and all the price was working below here, because within this interval, that's saying within 15 minutes, this went up all the way here and still closed down here, right?
I didn't have
So,
the VWAP on.
the VWAP is
that's
so,
what messed me up.
because here's my thing, okay? So when you're coming out of this, all right, so number one, when you see that this super trend right here, I don't really, if I'm in a position, I'll use a 15-minute interval, but I don't ever look at setups down here, okay? I don't ever make a decision to enter a position anywhere in these intervals, number one, okay? I'm always starting here, right? So I'm always looking for the best opportunities in these indicators on a day, because if anything, this was the day to get into this. I mean, and this is why stochastic is so important, because while these may not always go to their extremes, like we may not create new lows here and we may not get new lows here, but even then you can look and see how over time, this may be our bottom, right? We can see that on this RSI, this is about as low as it's gone for quite some time before even the biggest jump in January, right? So if I know that AMC is something that can get pumped, and I know that this is where the RSI really gets maxed out and nobody's letting it below here, and then this tells me that the momentum has reached a low, right? So this blue one, like I said, is your momentum side of the stochastics. The orange is the price. So imagine this is just following the price. Notice as the price goes up and down, this does too. Okay, this orange line. But this blue one is what's important, because it's the sling that sends it back and forth. So if this orange line may not be reaching a max, but this blue has said, I'm maxed out, I will spring you back towards this direction. So this blue line will at least let you know when things are about to turn against you. Right here, it told you right here to get out before this price even did, right? So I really, when I learned about this stochastic, this was like game changer. I don't watch it all the time, but I do want to be at the bottoms of this, because it at least lets me know that my momentum is leveraged with me. Okay, because if I'm up here, you only got one way to go, right? So even on the 26th, right, when you had this opportunity right here, this was already telling you that the price was getting weak right here. And then once it crossed it, it pulled it with it, right? Now, generally speaking, this was just on a day, so this is big picture, but if you're going to trade and you're in it, you would use smaller intervals, because you're looking at when exactly that change is going to happen. Because like I said, I'm making setups here. I'm looking at when I can get in, best opportunity here, right? So I can come in and enter this position here, but when you're already in it and you enter it, now you want to break it down and dissect the movements. So as that day was coming, as Friday was coming, looking at this 15-minute interval coming into the day, I can see the super trend was giving me support. It bounced off of this. Now, knowing you can't do anything with your option in here. So you're at the mercy of what's happening here, because there's nothing you can do about an option right here. Your option is just waiting on you, and it's either going to print right here or it's going to drop right here, right? So you're just sitting here and you're like, Lord, dear baby Jesus, I hope you open up. Now, this first sign of VWAP is letting us know, oh, it's looking good, okay? So yeah, if you thought you could get 36, it's there for you, right? And let's actually go to big picture and see where this has gone in the past. So this 14.
That's the highest. That's
so
the
20.
highest.
Oh wow, yeah, that's
36 was the highest ever.
Wow. Well, yeah, ever. But even if we were to look out big picture, we already know that this is as far as we can go, right? So this back in 2015 of March, we got as high as $34. Right. So generally speaking, had anybody come in and just looked at this, they would have known that on that particular day that we broke over 29 and reached 30, the next opportunity to take some money was right here at 34, because I can't even imagine it spent 5 minutes. I don't even think it spent 2 minutes up there.
And I didn't look until after I lost the money is when I looked back to see that it's never gone past 30. Yeah, I just messed up, but it's all good.
Wow. So within about 2-3 minutes. So this was 1 second it went up, and then it gave you another jump up there, And so within 6 minutes, you had an opportunity to get your window up here.
And guess what? And I did it. And so then I was stuck 7, 8, and 9 minutes, and my money was going down.
And this is why I say don't use smaller intervals too, because notice how none of these indicators really make any sense. This thing then crossed everything, right? But it's still centered in a downward trend, but I usually try to do 15, 1 hour, 4 hour a day. But I started a day, and then I start to dissect down to about a 15-minute. But leading up to that day, right? Like I said, coming into the market, it looked healthy because at least this VWAP is giving me support, but I would have been the first to get out here because look at where I drew this line. Now, I don't think anybody thought it would have gone up here, but based on where it's been in the future, I would have already had this line here. Right. And I'll tell y'all this too. I don't ever, if I'm going to enter in position, I always want to come in and chart these lines because they're very significant to where this thing has the potential to go and hold itself. Because even when it broke this level right here, let's say you came in and charted this and said, dang, we've been up here before and actually held this position. But from there, we dropped the next day 41%. Okay, so I know that if I ever make it to $16 again, I know it's all gas, no brakes over this. And that's exactly what happened the next 2 days because they realized, here's what all these people realized in these 2 days is that I have so much leverage and support at $16. Okay, so I feel even more comfortable to run this up. Now, these broke through these indicators on a day. Okay, so in terms of this, these types of things even happen on Tesla for multiple days at a time. Tesla can go oversold or overbought, excuse me. So anything in this, you're really like, you know, you're just winning. You just happen to be at the right place, right time, and you're holding through this. But this volume alone will let you know. Look at the average volume, 105, and it hit 660. Right. So even in these types of days, on this day, it hit 697 million volume. So you can only imagine how much support. And even when it broke over this, notice it kept building in that volume. Right. And even this histogram kept growing. So that lets you know, yeah, you can hold it. But at what point do you realize, oh, we have maxed out? Right. We have maxed out about here. So even with as high as this was in the past, we can see that if I'm passing this, there's only so much time. So on the 27th would have been the best day to just step away with probably max profits, because on this day, you're really just gambling, but at least you knew that there's a possibility to get here, right? And so on the day that it opened up, like I said, you had that support from VWAP, but I'm trying to sell as soon as I get the go, right? As soon as the market opens, I'm out of here. Because I already know that if this goes sideways, right, I'm losing money in my option. And all of this, I'm losing money. And then I've collapsed here. Like at this point, this is probably where you went negative. Because at this point, it was such a high and then dropped.
That's exactly why it was like almost 400. And then where your arrow is, it was like minus $16.
Wow.
So, yeah, but it's okay because I had a few contracts and that was like my runner. So I was happy because I thought, oh, you know, but I did that one I lost. So it's all good. Now I live and learn.
Yep. And like I said, when you're at these highs too, go ahead and take it because when the market opened and you saw that this was maxed out, I
could have got back in though down here and well, no, I couldn't. Not this. No, I couldn't have got back in because it just stayed sideways for the rest of the day.
Yeah, I wouldn't. And I'm gonna tell you one thing, Kim. Don't ever be trying to drop back into some trades, okay? Don't ever.
I know. I
used to do like what I would do was I would be really aggressive. I would trade. Say I got the option here, all right, and I'm like, all right, sell the option immediately, buy the put, and then I'm like making money this way. But I don't trade that aggressive anymore because I just don't have the time to really do that much charting as well as just aggressively watch my screen for that long of a period of time.
Right.
But these are the types of things that we can see because one thing you know for sure, is that if you just made money on your call and you know historically that this red line is the highest we've ever been, what do you think I want to do with the highs? Right?
Exactly.
And
Yeah.
that kind of high, like when we know, because even look at, like I said, we had so much support around this $16 right here. When the day came and VWAP had pushed it over it, notice that VWAP held this up the entire day, right?
Mm-hmm.
Even at close, it met it and said, okay, next day we still gonna push up, right?
Mm-hmm.
So the VWAP is sort of that first line of defense to tell you whether or not you're in a good position, because I can tell you this, if I would have opened up and VWAP was over me, I'm definitely getting out. I don't question it. I've learned too many times that VWAP is not lying to me, because it's already and it works the best at high volume times. So at the beginning of the day and at the end of the day. So yeah, in a position like this, what we usually forget, let's say you did miss this run, let's say you missed this bullish run. I saw a lot of people just make money on the put, because if we know that this is the all-time high of AMC, and AMC as a company doesn't even deserve to be up here, your first opportunity to make some easy cash would have just in the money put. As much as it costs, just go ahead and buy, because you know it's not staying up here.
Well, I was so, and it's exactly what in my head after the fact, but I was so dumb and thinking that it's going to go back up. Just hold it, girl. It'll go, instead of, going, girl, okay, we'll get the put. That's what I mean. Like my thinking gets crazy.
And even with the cheat code, it gave all these signals, right? We're maxed out here. This is already creating this downtrend. Now from here, we already knew we had a lot of resistance here. It's already telling us that at this price, you're going to reach a lot of resistance here. So at this point, we could always just draw this line. So at 30, we've got a lot of resistance. 36 is probably the highest we've ever been. So I know within this range is so much weakness. So I can't expect to stay up here. And then Chico was like, literally, hey, buy put on this bar and you can catch this, right? But then these reversal bands will let us know when it's going to come back to a position that we can enter again. Because like I said, we know that at $16, we have support. So that's why this is setting your first price target for a put at this line, because this is like the first line of defense that AMC has before it can head down to these types of levels. Because we know historically, I don't think any of us, since we've had that $3 and then it ran all the way up, this thing really doesn't go below, say, like $9 or $8 before people come in and say, all right, another run, right? And even for the longest, it's set at $12, right? So for an entire month almost, well, just I guess for about a couple weeks, or even this time, it still didn't move out of this $9 to $10 range, right? So for the longest, it was going sideways. And then these signals right here started to let us know that we were going to be easing up out of this. So I don't ever use one at a time. Like I said, I try to have them collectively tell me a position, because even right here, it's saying sell. And on the smaller intervals, actually, you know what? I think I might have my extended hours on. Let me see. Status. No, it's not on. Cool. So when these signals come up, you could, always take profits here and not be bad. But here's another opportunity to enter. And I think after it broke over that 16, that's when this got all gas, no brakes, because like I said, once you kind of break over those levels of support, then people know that they have or resistance, excuse me, when they know they have support after you've broken over that resistance, right? So this right here, even when it broke over this 16, this was still a great run. And even here you could sell, and next thing you know, I wouldn't get back in here. So I feel like everybody that was in this was just blessed, because there's no way that even that I'm gonna tell you right now, if I ran from here to here in options, I'm going to be selling completely everything as soon as I got this sell signal. I'm not even gonna lie, like I'm just gonna be sitting in here waiting on this run. So I try to tell people all the time that a lot of what people have gotten in and stayed in is just based off of the fact that, you know, they were just forcing to be in the right place at the right time. Now, this still gave you good support. This is telling you right here that for the most part in this day, you're doing pretty good. Now, I'm still going to have to say that I would sell at these types of levels, because even at this point, you still only got like $3 to run before you are maxed out. So you really have high expectations. I really start to consider areas like this a gamble. This isn't even skill. This has nothing to do with any sort of skill. This is all people gambling above this. Like everybody that made money here was fortunate that, you know, because still, I'm not even gonna lie to y'all, I would have gotten out here, and maybe if I didn't do it there and then thought I was gonna get another bounce here, I would have left here, and I'm done here. I'm done here. I don't even want to wishful think my way to this area, but it does let me know that there's an opportunity to get here, and it went there, right? And then the super trend is still telling them that you got support, but like I said, when it comes to options, you can't do anything in this time. So even though this looks good, I'm still thankful that I opened up, still up, and I'm ready to let it go right here, because I can't expect anything else out of this. And then let's look at Beyond, because the Beyond had the same type of day where it went from like 100 to, this is BY. So it went down from 100 to 150. Wow. Now, why did it stop at 150? Because that's where it's been in the past, right? All of this resistance it gets in this level right here, it's clear why we stopped here. Now, where it is right now, if it can continue to have leverage up, I still know that it's got to stop at 160. Now, why did I have that line at 160? Because right here, the last time we broke over that 200, we fell here and really held support here. We stopped around this area and then collapsed through it. Right, and then from that point we came all the way back to this line, tried to hold it, didn't, and created this new low right here in terms of a recent price anyway. Obviously we've been here because I think the stock opened up lower than that. Yeah, so we've obviously been here before. So even if I drew a line at this low, you can look to the left and find out, well, what happened around this particular price? Well, one, here we had a gap. Okay, this gap right here let us know that this was definitely a level of support that got collapsed. Okay, and then when it came back, now I think this was also, yeah, this was 2019. So once we came out of this uptrend and broke through this level again, it created such a strong day with this 19%. Because like I said, anytime we come back to these levels of resistance, let me get rid of some of these indicators so you can see. But notice how it literally catapulted right off of that line. And I only got that line from over here. And this is recent, right? So this was the low that it went to recently. And this is back in 2009 that it got action around this price. Even right here, we stopped here once it showed that we were fighting to beat it. Next day, we opened up 26%, right? So that's how I was saying, when you find these gaps, and what gaps are, is a gap in price. Okay, so it closed the day at 100. Okay, and the next day it opened the day at 110. Okay, so all that gap is letting us know that in after hours, people were like, oh, we back at this line again. Boom, I'm gonna send it over. That's why a lot of people play those type of trends. I personally don't, because even right here you can see when you're trying to fight over, you're fighting, you get a little weak, you find support here, right? Support, it came right back to this line, fought right back to where we're trying to go, still fighting. And on this day, it was like, oh, we over it? Cool, right? And then we at least hit this line. And at this point, we realized, oh, well, we got such a strong trend here. The next day, that volume pushed this all the way up, right? So this is another gap. And anytime you see these types of gaps, know that they have to be filled, okay? The stock cannot go anywhere until it fills this gap. It has to prove this price movement. Even though it's proved this in the past, this gap, that means that, like I said, we closed at 158 on this day, and the next day we opened at 218, okay? So When you see these gaps, know that this is not a time that you need to get in. You could honestly just be looking for a position to fill this gap, because even after it came down, it didn't took it but 3 or 4 days to collapse right back to where it came. Now, people call it this little bounce, but once you head back to this line, you gotta know that this is gonna collapse from here. Because if I bounce from here and I don't head back here, well, you're gonna come back and test this line. So on this day, we got a low below this line, but we happen to hold up above it. But as soon as this line showed that we opened up here and we had no highs, okay, we didn't even fight, okay, literally where we opened was the high today. Notice that. So notice these numbers right here, okay, watch this. The high of the day was the open, okay. That is the worst sign of collapse. Okay, that's why I always say pay attention to how these candles are set up, because it's important. Because this day, all of these days, it was already telling me that it wasn't trying to make any highs, right? So the wicks at the top are really short, almost like the body starts at the top, right? So all of these days, our high was extremely close to our open. Okay, so that's already telling me that where we're opening, we're falling from it. On this particular day, we kind of went sideways because we were trying to hold this line, okay? So when we're here and we created a low below it, that already let me know that the selling pressure is pulling us down, okay? Now, if the next day we come in and we open and that's the high, that was the last chance we had to prove anything, I know it's down from there. Right, and where do I think it's going after that? Well, number one, it's going to stop at this line because we were trying to fight over it. So I know the first speed bump is going to be here. And what happened? It stopped exactly on these lines and went sideways for a week, right? And once they realized, well, dang, we can't even hold this, right? Well, you're going to fall through this area as well. And then you try to fight back over these areas, but you can't make it. So you get weaker and weaker and you collapse. So as you see these signs, right, if I can see that I'm trying to break through and I can't, I'm not trying to enter this position until I can find a position like this. And I'm not even gonna lie, I tried to enter beyond. Now, I didn't go buy the option, but I bought the stock at like 115. And as soon as that joker passed this line, I was out. I told you I don't allow, like, when my stop losses are set, I respect them. I don't, like, if I know that I'm fine at 114, then I'm gonna hold at 114. But as soon as you pass 114, I'm not holding you. If I know that this is your previous support, you've been supported here, you've been supported here, my max ability to support you financially is at 114, right? And if you as a stock cannot hold that, then I'm not looking to ride you down with it, right? Because right here, you lost a whole $14 if you didn't have a stop loss. Right. And in options, you really losing some money. But in stocks, depending on how many shares you're holding, that adds up as well. Right. Because God forbid you accept, and you're like, oh, it's 103. I don't know when it's going to go stop. And then you go sell at a loss. And then the thing reverses from there. And then you sitting there like, well, dang, I let go of it. Right. Now, for me, I came and bought some more. Like when it passed my stop loss at 114, I just needed to watch it. Because I had to find out what line it was going to respect in terms of this reversal. Now, if I have the EMA on, we had already passed the EMAs. So I couldn't even use them as a way to see where I have support because we've already passed them. So honestly, I'm looking at this type of stuff. I'm looking at these indicators to show me when are we showing signs of letting go of this selling pressure. Right. So I can see this right here. We're starting to curve up on this line as well as the middle histogram was starting to ease up. Now, I could have bought an option. I just didn't. I should have, though, because these are the types of areas where I shouldn't be second guessing myself. I should already know we're going to spring back from here. But I still just was like, I trust this stock and I don't really feel like watching the options. So I bought more of the stock here at about 100. And just kept buying throughout these days because I saw that we were getting out of this downtrend. All of this was showing me signs of easing up out of here. And to be honest, I don't expect it to turn around, right? I don't expect this RSI to just go back to, these lows, right? I can only expect that I can have leverage to get out of this mud. And I'm in a good position here because the reason why I had a stop loss here, And like I said, I will be the first to admit that I entered a position right here because I thought we were going to catch this bounce, right? But even right here, my RSI was oversold, right? This was pretty low. So there are times where you'll come in and the signs are right, but this MACD was not looking good. Okay, so while RSI was like, yeah, you're oversold, and Stochastic was like, yeah, we're down here, right? MACD was like, I'm opening up. I'm just getting started on this downtrend. Okay, so always pay attention to these signs because even right here, I got a little antsy trying to get in, and this wasn't showing any signs of lightening up. Like this was only getting deeper in the dark. It wasn't going lighter. This was widening the gap and going down. So, but once I got to these types of levels, I felt even more confident, right? I've got even more leverage because I got out here, saved all my money through all this sideways and going down, all this, and I just kept leveraging myself in these positions. Because Cam, I'll be the first to tell you, you can't guess when these breakouts are going to happen. You can use cheat code and the squeeze and a bunch of different indicators to try to find out when is the order flow coming in. Even on analysis, right? We can look at the order flow and say, hey, well, on the 24th, I knew that from there I was getting better and better and better, right? In terms of even flow of orders. So there's a lot of different factors that you have to keep up with as well. Look at the average volume. You know, when you can start seeing that there's volume starting to come in, then that's good. It's not always a good sign, but at least lets you know that we got the leverage to go somewhere. Okay.
Well, you know, can I just say one thing, if you don't mind? Because when you know how you said go to Barchart and go to the most active options, and then you see. So I went over there and I should have known because I started seeing the puts start to catch up with the calls. You think so? And then that's when things started getting janky, and I should have paid attention because at first, the very first day, the puts were at 20 and the calls were at like 80. So the number, like you said, the volume, and then it started changing, and that should have told me, like, I saw that warning and I still was like, no, it's going to go up. Like,
yeah.
So,
yeah. And that's, I'm glad you said that too. So for anybody that missed that, bar chart is what she was talking about. It's like, you know, when you probably entered that trade for AMC, it might've been a 20 or 30 or 40 put call ratio. Right. But now it's as high as 0.93, which means it's almost 1-to-1. So for every put, there's a call. Right. So this lets you know that the leverage is coming against you. Right. So in positions that have lower put call ratios, they're not always the best play, but they are at least letting you know that there's not too many people fighting against you. Right. So but you know, right now I think the lowest are Sundial and Tilray. So right now it looks like weed in general is not being betted against. So reason why some of these are probably moving, because I think Sundial was only at 85 cents, maybe 80 cents, maybe even 75 cents, right? And so
because
it started
they decriminalized, and they decriminalized, they're passing a bill, and so all of the Congress, a lot of people in Congress are buying calls for Tilray. Yeah, so you might want to pay attention to weed next week because Nancy Pelosi bought a bunch. Because they're decriminalizing weed federally, I believe, and so I saw where a bunch of Congress people were buying calls for weed.
Really? That's interesting. Well, I mean, we can see it right here that people are releasing the puts, right? So we can see that only 11% of people that are buying calls against Sundial is puts, excuse me. So, and then with Tilray, the same, it's a 0.14, which means that only 12% of people holding options are holding puts. Not to mention, honestly, we saw Tilray had so much support at 20. for the longest and then collapse from there. So what we're seeing right now is people letting go of the leverage they had against these weed stocks because and a lot of times when these things start to happen with these stocks, they're being pushed down so people can get a better price, right? So essentially, yeah, you always want to come and look at these things because it's letting you know where leverage is not against you. Now, in places like Tesla, I've seen Tesla use that in its favor, right? So I wouldn't trust this 80 so much, but when Tesla has like a high of like 1 or over, Tesla can use that as leverage and say, oh, you want to bet that much against me? Well, you have to let go. Right. One thing about these puts is they have expirations. Okay. When they expire, they have to be sold. And at some point, there's only so low a stock can go before these have to be released. So even at a time, Tesla was looking at the 1 and higher, but you can see that the leverage I haven't been watching the put call ratio, but it's important to watch this because if we know this number is rising, then people are working against us. So more leverage is being built against us. Now, if this number is lowering, then we know that leverage is, starting to be released from us. So yeah, definitely keep track of these numbers because they're going to just help you make the general senses of sentiment because some of these numbers don't really go that high, like something like Apple, right? You will never see this go like over 1 because nobody's going to be so leveraged to be against Apple. But maybe 60 is a high number or 70 is a high number for Apple. So the fact that there's that much leverage working against us, this price has to be pushed down, right? Because at this type of high for Apple can usually sit around anywhere from the 20s to the 40s. And that's a little more healthy because there's a little bit of like real consistency in price. But when you're getting this high, that means that more people are starting to leverage themselves against these positions. So definitely come in and watch this put call ratio. Keep track of these. Don't overwhelm yourself though. Don't try to trade everything that pops up on this list. Take your pick and focus on that. Study the price movement, study the ups and downs, try to find the supports and the resistance levels so that, if I know that Apple is getting weak in price and then I can come here and see that the put call ratio is increasing, then I know that this position is getting weak. Right. And there's even indices in here as well. So you can see how the general sentiment over the market is as well. So you can see that a lot of people are leveraging against the S&P. Right. And then even if you put it in, let's put the S&P, the SPY, which is the ETF for the S&P. If you put this on a day, we probably have this going down. Oh no, it's going back up. Okay, so we bounced off of this. Well, let's look at what's on a shorter time. Even this area is starting to get tight. So yeah, you can see that a lot of people are starting to leverage themselves against this position. One, because this is a high. Right. So if we know this is a high, of course, a lot of people are going to bet against this because they're hoping that it gets rejected from this area again. But I can tell you one thing. I've seen the market go down and the S&P take off. Right. So what we do know is if it can hold this position up here, it will have no problem shooting this way because what this signifies is that we have support now. What used to be a resistance is now going to be a support. But it has to break over this 419, 420 area and stay before we can really try to reach these numbers. Because what we do know is there's still a stop loss here. So what we can be rejected from this area and fall back down into these areas before getting pushed back. Because like I always try to remind people if I told you flat-footed to jump as high as you can, you first got to bend your knees. Okay. So even in a position like this, it's like jump as high as you can. Well, first I got to bend my knees. Okay. So always remember before something can catapult itself up, it at least has to come back and spring down. So even in a position like this, they could still get rejected from here. But if we can hold this line over this, then we can get shot up and then use this as leverage, because all of these people, the 65% that's betting against this, they got to let go, right? They have got to let go. So that's why I said it can really become spring action when you break over areas like this, because the only reason why people are betting against this is because of this. Okay, so if I know I'm having resistance here, well, of course I'll bet against it, right? So if right now we're sitting at, 420 up here, then everybody's willing to bet against it. And that's how much this is right here, right? And the VIX is interesting to watch as well. The VIX is the volatility. The VIX lets you know when there's a huge volatility in the price. So when this starts to reach 19 and 20, then you're starting to get in areas of high volatility, which basically means that, like, usually during that time, like the market is falling or something like that, you don't ever want this number to really go up, because it means, like I said, the volatility has increased, which means that the range of price that things are moving are extremely drastic. Okay. Like I said, keep up with these as well, because that'll let you know when this number starts to decrease, then we can see an upside in this. But as long as this number is high, we know that people are working against us heavily. This is saying that literally 65% of the people even invested in options in the S&P are saying that we want it to go down. Okay. So definitely watch these things. These ETFs as well are broken down in here. So the SPY, the QQQ, the SQQ, all these things will be ARKK. The example I showed earlier with Tesla, as well as Teladoc and stocks like that, you can see that they're being betted against. Okay, so it's more puts than there are calls for these ETFs, which means that at some point this leverage has to be released. Okay, so we go back and look at the Webull, and this will be the last thing, and I'll let y'all go and enjoy your night. But because I can talk about stocks all day, all night. But like I said, we have this area of resistance. We're all heading to this wall of resistance, so you can see the market betting against this. Okay. So even with Tesla, it's the same. Tesla is going to have a high leverage against it, because people are saying that I bet you won't make it over this resistance, right? So with Teladoc, with Tesla, and ARKK, they are all reaching this point. And if I change this to Roku, it might be in the same position as well. Why? Because it's in the same ETF, right? So if we come in here and look at ARKK, and you look at the analysis, the top 10 holdings, we've got Roku and Teladoc right here, right? So that's why I say anytime y'all are going to go trading something, try to find out what ETF it is, and make sure that ETF has a decent leverage in positions and it's not too heavily leveraged in one thing, because then it'll be skewed completely with that. But just notice how, Roku has nothing to do with Tesla. And still they move the same. You see what I'm saying? So always notice these types of patterns within stocks, because we are all hitting these levels of resistance, reason as to why we're being betted against in these positions. So always look for these types of combinations, because it'll help you kind of build a better watch list. In Webull, you can kind of come in and customize different watch lists. So I'll watch Riot and Mara and Bitcoin together, right? And I'll watch the SPY, the QQQ, and Apple and Microsoft together, because I want to know, how are these moving collectively as the market is following them, right? And then this is my crypto space with the Riot, the Mara, and watching Bitcoin, right? So I always try to find what stocks are really moving together, so that if I'm trading Tesla, right, I can watch ARKK and I can watch Roku, because as long as these are doing good, we can collectively do good, right? But if Roku starts to turn down and then Tesla turns down, or if even ARKK turns down, then I can expect the same types of trend in each one of these. So definitely start really dissecting your watch list so that you can find those types of similarities. So you're not just trading off of the price movement of the stock that you're trading, because you'll just be waiting for the next move when you can easily just go watch a collection of things that will let you know whether or not you have health in the direction that you want to go, right? So any questions on what we've gone over tonight? Anybody? No questions? Okay, that's good. That's good. That's good. Cool. Well, if we got no questions, we'll end here, and we will catch up next week. And I'm going to keep updating the page with these videos, as well as some other videos that were helpful for me. And then I've got some tools on there right now with the links to those apps and everything. But yeah, I'll keep kind of growing that page as I get the time, and then we'll schedule a session for next week. Cool beans? Nice. All right. Well, I'm out. Y'all enjoy your night. Have a blessed
Thank
week.
you.
I'll see y'all next week.
Okay, hon, you be
All
cute.
right.
You be safe. God
Will
bless
do.
everybody.
All right. Take it easy. Bye-bye.
Bye.